Welcome to the $1 Insights Guide on doing business in the UAE in 2024. Despite the adoption of corporate tax, the UAE remains a premier destination for businesses worldwide. In this video, we'll explore what continues to make the UAE one of the most attractive locations for doing business. Whether you're planning to start up or looking to expand, we've got you covered. We'll dive into crucial areas such as tax rates and essential business information you need to navigate the UAE's business landscape successfully. Let's get started. In UAE, there are two main options available to a foreign investor. Onshore incorporation, also commonly known as mainland, and free zone incorporation, in one of the free zones in the UAE. Each free zone caters to specific industries, enhancing the support for businesses in those sectors. Once you've chosen your preferred path for incorporation, either through the mainland or one of the UAE's specialized free zones, it's crucial to understand the next layer of compliance, navigating the Economic Substance Regulations, ESR. The UAE mandates economic substance regulations to ensure that certain businesses demonstrate a significant economic presence within the country. These regulations' requirement of adequate economic presence in the UAE apply to sectors such as banking, insurance, investment fund management, lease finance, headquarters, shipping, holding company, and intellectual property businesses. Entities falling within the scope of the economic substance requirements are required to file a notification with the Ministry of Finance every financial year. The notification must provide details on the relevant activities carried out, income generated, and related tax treatment. Licensing and capital requirements. Prior to initiating operations, it is essential for businesses to obtain a commercial license. The relevant licensing authority in each emirate also imposes a minimum capital requirement which varies depending on the nature of the business of the limited liability company. It's crucial for businesses to either acquire the necessary licenses before starting operations or engage a licensed local agent or distributor if opting not to register locally. For detailed guidelines on the business licensing process and to ensure you're up to date with the latest requirements, visit the official portal of the UAE Government. Strategic considerations for market entry. Crafting a market entry strategy for the UAE requires attention to several factors due to its diverse economic landscape. Considerations include identifying the type and nature of your products or services and ensuring they comply with the licensing requirements. Researching and understanding your target market, including the location of potential customers and suppliers. Determining the number and domicile of legal entities you'll need for your operations. Planning for internal arrangements, such as office space and staffing needs, to ensure your business is well positioned to meet its objectives within the UAE. Remember, thorough preparation and understanding of the UAE's business environment can significantly smooth your entry and operations in this dynamic market. Exploring the UAE's free zones. The UAE boasts a diverse array of free trade zones, each offering foreign companies special concessions such as 100% ownership, significant tax reliefs, and customs duty benefits. In unique cases, free zone entities might secure an additional license from local authorities like the Dubai Department of Economic Development to conduct permitted business activities outside their free zone across the Emirates. The heart of the UAE's free zone establishment beats in Abu Dhabi and Dubai, hosting the majority of these zones. These special economic zones are often industry-specific, situated within well-defined geographic areas, and tailored to cater to the needs of various sectors. While operating within the UAE's legal framework, free zones offer a degree of autonomy, adhering to federal and emirate-level laws to varying extents. Notably, the Dubai International Financial Center, DIFC, and the Abu Dhabi Global Market, ADGM, stand out as financial free zones. They are distinguished by their independent regulatory authorities, judicial systems, adoption of common law, and conducive tax regimes, positioning them as global financial hubs. Subscribe and stay tuned for our upcoming video for an in-depth exploration of doing business in UAE free zones. where we'll delve into specific benefits, operational nuances, and strategic insights for businesses looking to thrive in these dynamic economic areas. The UAE financial system. The Central Bank of the UAE plays a pivotal role in ensuring the dirham stability against the US dollar, maintaining a fixed exchange rate of $1 equals 3.6725 AED. This stability facilitates the free convertibility of the national currency into foreign currencies, underscoring the UAE's open economic policy. As the nation's financial regulator, the central bank acts as the bank of banks and serves as both the government's bank and its financial advisor. Its strict oversight of financial institutions has significantly bolstered the UAE's banking sector, contributing to enhanced service quality and performance across banks. Thanks to the central bank's dedication to creating a stable economic framework, the UAE enjoys robust economic health, benefiting all residents. Its strategic efforts have positioned UAE banks as formidable entities within the Gulf region, highlighting the country's financial strength and commitment to maintaining an attractive environment for both local and international investors. Business taxation in the UAE. Corporate tax. The UAE has introduced a corporate tax rate of 9% applicable to businesses. However, the first AED 375,000 of net profit is exempt from this tax, providing relief to smaller enterprises and startups. This progressive approach aims to support business growth and economic diversity. Relief for small businesses. Small businesses with annual revenues not exceeding AED 3 million may qualify for additional tax benefits. Eligible businesses can elect to be treated as having no taxable income for the tax year, easing the financial burden and fostering a supportive environment for entrepreneurship. Free zone taxation. Free zone entities that meet specific criteria to be recognized as qualifying free zone persons, QFZP, can benefit from a 0% corporate tax rate on qualifying income. This designation is contingent upon adhering to the regulations set forth by the respective free zone authority and the nature of the business activities conducted. Non-qualifying income, however, remains subject to the standard 9% corporate tax rate. Entities should consult the latest guidelines to understand the qualifications for QFZP status and the types of income considered qualifying. Understanding VAT in the UAE. VAT is 5% for most goods and services, applies to most goods and services, affecting all tax-registered businesses across the nation, inclusive of both the mainland and free zones. Businesses with an previous 12 months turnover of AED 375,000, which is equivalent approximately $100,000 must register for VAT with the Federal Tax Authority through an online portal. Exempt supplies often include specific financial services, residential properties outside the rental market, and bare land, while zero-rated supplies cover exports, international transport services, and certain educational and healthcare services, among others. The UAE and Saudi Arabia were the first member states to implement VAT effective from January 1, 2018, followed by Bahrain from January 1, 2019 and Oman from April 16, 2021. Qatar and Kuwait have not yet implemented VAT. Understanding excise tax in the UAE. The UAE imposes an excise tax on goods considered detrimental to public health or the environment, along with certain luxury items. This indirect tax targets tobacco products, electronic smoking devices and their liquids, carbonated drinks, energy drinks, and sweetened beverages. The tax is applied at the point these goods are released for consumption. Excise tax rates vary by category. Tobacco products and energy drinks are taxed at 100%, while carbonated and sweetened drinks are taxed at 50%. Businesses involved in the production, import, or storage of these goods must register for excise tax with the Federal Tax Authority and file periodic returns, ensuring compliance with the UAE's tax regulations. Accounting standards. In the UAE, all companies are obliged to maintain accurate and proper accounting records. While the country does not adhere to a national generally accepted accounting practice, GAAP, specific to its jurisdiction, International Financial Reporting Standards, IFRS, are widely recognized and serve as the principal accounting framework. Furthermore, the UAE boasts a comprehensive ecosystem of accounting, auditing, and legal services, marked by the presence of both prominent international accounting firms and specialized local outsourcing companies. This infrastructure provides businesses operating in the UAE with extensive support to meet their financial reporting and compliance obligations effectively. Investment climate in the UAE. The UAE government champions a free market economy, offering minimal regulatory restrictions to foster both foreign and local investment. Through the development of modern infrastructure and a business-friendly environment devoid of heavy taxation and exchange controls, the UAE positions itself as an attractive destination for investment. It has also bolstered its international standing by signing numerous double tax and investment protection treaties. While a general customs tariff rate of 5% applies to certain imports, the majority, over 75%, benefit from duty-free entry, supporting trade liberalization. Additionally, the UAE's export sector enjoys a tariff-free advantage, enhancing its global trade competitiveness. Notably, the UAE maintains a lenient personal tax framework, with no personal income tax laws currently in place. This policy extends to both nationals and expatriates, underscoring the UAE's commitment to a tax-friendly regime. However, the recent introduction of a corporate tax signifies a pivotal development in the nation's fiscal policy, aimed at aligning with global taxation standards while continuing to encourage investment. The UAE's financial system is designed for global integration, imposing no foreign exchange controls, thus facilitating the free movement of capital. In response to global standards, the UAE has strengthened its legal framework to prevent money laundering and terrorist financing, aligning with FATF recommendations. These efforts demonstrate the UAE's commitment to maintaining a robust, open, and secure investment environment, underscored by adherence to international financial standards and practices. Remember, success in the UAE's market requires understanding its regulatory landscape, from economic substance regulations to the nuances of VAT and excise tax. If you found this video helpful, don't forget to like, share, and subscribe for more insights into doing business around the world.